Good morning and welcome to our virtual class in your subject ACTG 6153, and this is Fundamentals of Accounting Theory and Practice. Our discussion today is about this week 4 module, and this is entitled Partnership, Dissolution, and Liquidation. And I'm your Professor Susan Maminta from AMA East Rizal branch. In today's discussion, our learning outcomes for you to learn to define what is dissolution, what is liquidation or termination, and what is winding up the partnership. Also, you will learn to distinguish between dissolution and liquidation, and as well as enumerating and understand the different causes of dissolution and termination of a partnership, and what are the accounts for dissolution and liquidation of the partnership. So we have these two important terminologies, and these are the liquidation and realization of assets. No? When we say liquidation, that means this is the ending or closing the partnership. And for a realization, that means these are the selling of the non-cash assets of the partnership, and for that you can have this valuation that will result to gain or loss of that non-cash assets. Okay. So what is dissolution of a partnership? Dissolution of a partnership is the change in relation of the partners caused by any partner ceasing to be associated in the carrying on as distinguished from the winding up of the business. This is the time when the partners stop to operate the business together. While a partnership liquidation is the process of putting an end to the partnership, and that means a distribution of assets will take place. While a termination is the point in time when all the partnership affairs are wound up. So that means winding up is the process of clearing all the affairs of the partnership after dissolution. Okay. Take note that a partnership may be dissolved without terminating it, but liquidation is always headed by dissolution. So what are the causes of dissolution of partnership? One is the admission of a new partner in an existing partnership. So under this cause of dissolution, it can be from incoming partner purchases a portion or whole interest of an old partners. Or it can be there is an incoming partner that makes an investment to the partnership. Okay. So that means a dissolution because of the new member in the partnership. No? So a withdrawal is also a cause of dissolution, withdrawal or retirement of a partner. And under this, okay, that means there is sold to an interested outsider with the consent of the remaining parties. Okay, that means the interest, no? The interest to the partnership are sold to the interested outsiders. Okay? Or another one is that the interest of the partnership, okay, that is about the investment that we are talking, the interest. Okay. Take note on that, okay? This investment that are sold to any of the remaining partners, or the investment are being sold to partnership itself. No? So these are the different scenarios that are under withdrawal or retirement of a partner. And also, another cause is that the death of a partner. Okay, and for that you have to really have to this closing the books. You have this deceased partner share in the profit and losses. You have this valuation of assets, and you have these terms of payment to be applied. And another process, or another one of the causes of dissolution is the incorporation of a partnership. This is similar, this incorporation of a partnership is similar to selling the partnership to a corporation. And for that, this will be closed, and now that the business will be a corporation already. So now, let's talk about liquidation. So liquidation is the process of bringing a business to an end and distributing its assets to claimants. So who are the claimants? Of course, the creditors and the partners. Okay? So the process of closing the partnership and distributing its assets. So that is part of liquidation. No? You have to close the partnership and distribute its assets. And also in liquidation, that is the outcomes of dissolution. So what are the reasons for liquidation? One is bankruptcy. Kung baksak talaga, no choice but to close the business. Okay? Or another one is that they wish to start a new business. They want to close the old one and start a new one. No? And another one is to settle account with partnership creditors. So there are steps in liquidation of a partnership. Okay. Number one is to sell the non-cash assets, or that is what we call the realization of assets. So if the partnership has this non-cash assets, like what? Like accounts receivable, that's not cash. Okay, like supplies, like merchandise inventory. Okay, like this prepaid. Okay, so this will be realized. That means there will be a valuation of these non-cash assets, and that is converting them into a cash. That is a process of realization. And then the next one, after after the non-cash assets were realized, then there is now a division or distribution of gain or loss, no? Because in the realization of assets, or in the valuation, of the assets under realization process, you will have this gain or loss. So if there is a gain, that is additional capital to the partners. Okay? If that is a loss, that will be deducted to the capital of the partners. So in the payment of obligation, of course, the first to be paid are the preferred creditors, and then the secured creditors and the unsecured creditors. So if all of these creditors are already been paid, then we can proceed to the payment to partners, or that means the return of the excess money to the partners. Okay, so we have the two types or methods of liquidation. One is liquidation by installment, and the other one is lump sum liquidation. Okay, so let's have an example of this liquidation by installment. Okay, so in a liquidation of installment, from the word itself, it is installment. It's not a lump sum, no? It's a partial payment of what is in excess in the realization will be distributed partially. Okay, so for example, class, okay, these are the statement of liquidation. As you can see here, we have the cash, the assets, and the accounts payable, the notes payable, and the this is also a payable to loan to Miguel, the partner, and these are the capital account of the partners. So we have these two partners. Okay, we have the Miguel and Norman. No, Miguel and Norman. Okay, they have these separate drawing accounts and the capital accounts. No. So at first, since this is a statement of liquidation and installment, so at first, yung receivable muna ang pinick up nila, no? So the receivable that is in the value of 36,000 ay 30,600 lang ang na-realize. So talo, no? Talo siya ng ilan? Ng 5,400. So yung 5,400 na yan will be distributed to Miguel and Norman. Okay? So that is being deducted to their capital account, no? Ito kasi yung capital account nila, no? So si Miguel may capital siya ng 150, si Norman meron siyang 95,000 capital ending balance, no? So as you can see, it is installment, no? Now, again, you take all the balances, okay? This one will be deducted here, okay? And this one will be add, no? So, nakabet na i-realize mo yung receivable mo, so nadagdagan yung cash mo. Since you have enough cash of 50,600, that means you are capable of paying your accounts payable. So, you have to pay your accounts payable. So, mababawasan na yung cash mo at mawawala naman yung accounts payable mo. Now, the next thing is your inventory. How much is the inventory? The inventory is in the amount of 185, pero na-realize lang na 175. So again, there is a undervalue of 10,000. That should be shouldered by Miguel and Norman. No, again, you get the balances, and then now you have this 190,100 as your cash, because this one and this one totals to 190,100. And that means you are capable of paying the other payables, like the notes payable and Miguel. So you pay Miguel, you pay this notes payable, since this is already 55,000. So again, you take the balances. So how much left? You have that cash in 135,100, and also the balances of your non-cash in the amount of 76,000. Okay, this 76,000 is the amount of your equipment. So the equipment was realized at 50,500. Again, there is a loss in the valuation, so the loss will be shouldered by Miguel and Norman. So since we don't have now the non-cash assets, what is left is your cash, okay? And then you have to get the balances now, and take note that you have that drawing account. No? So you have to close the drawing account to the capital account. That means this will be a minus to the capital. So this one is closed already, and this one. So this amount will be deducted to the capital account, no? So what will be the balances after deducting the drawing account is that you have this 185,600 good enough for the amount to be paid to Miguel and to Norman. So as you can see here, the distribution of the remaining cash in the amount of 185,600 is totally consumed with the payment of capital investment of Miguel in the amount of 116,960 and Norman capital in the amount of 68,640. So that is an example of liquidation by installment method. Now, for a liquidation using a lump sum, okay, is in this manner. Okay, as you can see here, okay, you have this, the non-cash assets totals to 297. Okay, so again, you have to get first the drawing account to be debited, okay, deducted to the capital account. So the remaining balances are in this value, no? So you are going to take the lump sum value of these non-cash assets, no, for distribution. But in this time, we have that value of 297,000 in the amount of 330. So merong gain, no? So yung gain na yan, i-distribute mo ngayon to the capital of Miguel and Norman. But this distribution will be in accordance with their agreement, of course, no? Kung ilang portion, ilang percentage si Miguel, same thing with Norman. Now, after that credited that to their account, so you are going to get the balances again, no? As you can see here, since you have enough cash, you are going to pay all the liabilities, no? So the notes payable and the accounts payable, no? Of course, the case, if take note on this, the first thing that we did is the to settle the loan to Miguel, no, 25,000. So nawala na siya, no, zero na siya, no. So going back here, so since you are paying the liabilities and that totals to 65,500, ito na ngayon ang natira sa balances mo. And as you can see, these balances, okay, the 284,500 is the exact amount to be paid for 186,300 to Miguel and 98,000 to Norman, no? So kung kanina ang ating presentation, yung loss, ang realization of the assets, this time we are presenting a gain in the realization of non-cash assets. Okay? And the difference between the installment and the lump sum as the term, no, from installment, that is partial distribution, but while the lump sum, that is the one-time distribution of the whatever is in the balance of this liquidation statement, no? Okay, so that ends my discussion today, and I'm now giving you my last slide. And again, class, thank you for listening. Bye-bye.